Hello, hello. Hi, this is Vincent Nguyen, and this is Tipline. We've got a lot to cover, and so let's jump on in and take a look at the charts. All right, so I guess the title of today's live is, are you green or greedy? Because a lot of the stocks that we're trading this week or previously are all green. ACB, is it red? ACB is red, right? I'm seeing ACB as being red. But give me a second, Yim. Hey, hello, Joe. How are you guys? Hey, Yim. Am, you are first in line again. I think I'm going to have to get you a Tipline shirt. In the process of designing it and getting it printed. So stay tuned. Meanwhile, send me your shirt size. We're going to get some Tipline shirts out there to all the fans. Okay, so I'm going to jump into NASDAQ real quick. Yeah, thanks, TTG. Okay, send in tickers. I have a set of tickers, 8 I need to go through. But for now, let me jump in and look at the overall market because I think the CPI data came out today. NASDAQ is up. I mean, I'm still counting on NASDAQ to retrace at some point here. It has to. There's just no way around it. It's going to continue to bounce around and consolidate in this range for, I want to say, a couple more days before it breaks below the 20. And then we'll see what happens from there. Okay, so that's NASDAQ. SPY really quick is red. I was thinking it's gonna bounce off this 20 and hit the 618 right around 500. I mean, that could take a couple of weeks at least, so not sure. So right now, whatever the data came out today, I was on the plane when it came out. I don't think it's going to have a negative impact. I mean, most likely we'll see 443 or this low of, yeah, about 443. And then I mean, that would be the absolute low because it's quite bullish above the 200, above the 20. If nothing else, so as you can see here, it tested the harmonic optimized pricing at 451, broke above, came back down. It's using the 20 as a springboard here. Came back up. Now it's hovering around the 58 and 3. So let's see what happens. I'm still very bullish with SPY right now because it needs to complete this last leg for the 5 before it does any sort of retracement. All right, so I'm going to jump to ACB. Okay, so is it Yim that asked about ACB? Oh, shoot. Oh, man. Why do I always do this? I keep forgetting to switch over to the chart. You guys got to remind me, okay? All right, so forget everything I said about NASDAQ and SPY. I'm just kidding. You just have to take my word for it. So let's jump into the chart. I apologize for talking to you and not having the chart up. So I think Yim brought up the fact that ACB is green and I have it in red. Yes, I have it in red because it's down. Isn't it down 14, like 16%? Yeah, ACB is down like 14%, bro. I mean, yeah, so from this drawing of the 4-hour chart, we did this, what, Wednesday? I predicted that it was going to come down and test this flag that I kind of drew out, this bull flag. So I'm off by a little bit, I want to say. So I'll move it here for now. So I drew out 2 scenarios. One, it could break up or break down. And I had the pricing right at about 72 cents. It's pretty critical right now. Right here, this is the battleground right here at about 79 to 80 cents. It needs to, I mean, the bulls really need to step in and either another bounce up, bounce down, and then run, or we could see a complete retracement here of ACB. This is on the 4-hour chart. Okay, I'm going to delete this real quick because I don't think that line has any value. Let me look at the day chart real quick. Day chart. Okay, so it makes sense. Okay, if you follow along here, this is the remember I drew this green line, the 200-day moving average. I mentioned that price is going to come back down and test the 200. I don't care how much it runs or ran or how much it's going, you think it's going to run or want to run. So it nailed. Let's see here. Sorry guys, hold on a second. Bear with me here. Okay, why is my chart acting weird? Okay, that's why. Okay, 1 second. Okay, so it ran a high of 158%. Right? So if you didn't consider taking profit here, the answer to my question for this week for you is you're greedy and you paid the price. Why? Because it retraced all the way down to 36-37% here, which is exactly where I said it would at the 200-day moving average, 73 cents, right? Today. And it got pushed. So it opened at 90, which you still had a chance to make some profit if you came in around 60, 70 cents. Now, if you bought in during this whole hype, then yeah, you're in the red right now. So that's terrible. It's terrible. So yeah, the 200-day moving average, which I called out at 72 cents earlier in the week, which is this green line, it nailed it this morning to the penny, 72 cents to the penny. It bounced off the 200. And so now it's sitting at 80 cents. So what do you think is going to happen next? I believe that price drove down to 80 cents. It's either going to bounce back up or it's going to come down and meet the 8 pretty quickly here, probably tomorrow or Friday, before it does something else. Remember, the 20 acts like a magnet. It's a faster magnet than the 200 because the 200 is a longer moving average. So the 20, you're constantly going to want to come back and check with the 20 more than the 200. But in this case, the 20 is under the 200. So guess what? My thinking is the 20 is going to pull price down closer to where it started. And there's this whole gap fill that it needs to come down and check. So that's ACB. I don't remember what the catalyst was for ACB, but it's looking like it's going to knife here if the bulls don't step in. Sell volume was 112 million shares today in the red. Yeah. Okay, you got to ask yourself, do I want to stay green or do I want to stay greedy? Green or greedy? It's your call, my friends. Okay, so that's ACB. I can dig deeper into the nitty-gritty swing trade or scalping if you want, but I do want to just knock these trades out really quick. AMC, if you watch my video on AMC, I explained to everyone 2 weeks ago that I'm extremely bullish because, not because the price has dropped to an astonishingly stupid low because of all the effery that the company has done, mainly the AAA guy, but because of the bullish inverse head and shoulder that I've drawn out for everyone. Okay, so my price target still remains at $38.34, and then come back down and test the $27 and then bounce up to $44 at some point. Okay, and it's making its way there right now. Now look at what's happening here. It's slowly making its way towards the moving averages. Okay, so right now price is closed. Yesterday was an attempt to close above the 3 EMA. Today it's probably going to close above the 3 EMA. And then guess what? The next one is going to be the 8 EMA, right around 938 is what I'm looking at. So, I mean, by Friday, I want to say that by Friday we could see $9.38, and then at some point next week 13, okay, and then retrace. So it's basically mapping itself over from here over to this side. Okay, so what goes up must go down, what goes down must go up. And then as you can see, the moving averages are lining up right now. As a bull, you should be frothing at the mouth if you have dry powder coming in. Now, if you're bag holding from up here in the $3, $4, $5, $6 range, or that was pre-split, 10-to-1 split, if you're up here, then yeah, you're in the red. You're bag holding, my friends. Just hang tight. This is gonna happen. You'll be able to get out when it hits your price target. The question is, as AMC hit these targets, do you want to stay red, or do you want to get out with a little red, or do you want to be greedy and take the risk that AAA is going to drop more shares? He just dropped 40 million shares, right? And AMC is at 81 cents right now. I mean, for heaven's sakes, GTI is above AMC right now. That's freaking embarrassing. TTG, I see GPS. I'll take a look at it if we have time. I've got a whole list to go through. Okay, so bear with me here. FNGR. FNGR, my position has not changed. I did state that FNGR is bullish, and I made a call out this morning or earlier today that I want to see FNGR hit $8.60. Why? Because of a previous pattern I see. Right. I know it was here earlier. I don't remember where it was, but I have a price target measured out for about 860. Yeah, right here. About 860 right here. So this was back in January 6th of 23. So this is a very, very, very delayed pattern that I drawn out here. So what happens after this? I know someone on Twitter asked me what's going to happen, stop loss, etc. I can't recommend stop loss, but what I can tell you is wave 4 to 5 is happening. It's concluding soon, and it's right here. Started wave 4 started on July 24th, and it's going to end soon. And right now we've got the first red day today of 1, 2, 3, 4, the last 10 days. So that tells me that there's going to be a change in sentiment. The market is going to start going against FNGR, meaning that the bulls will start to lose steam and the bears are going to step in. So there could be another gap up push to about 850 to 860. And then guess what? From there, I anticipate a downdraft to either a 618 ratio, which puts it again right around $5.42. And look at this. Oh, cha-ching. The 20 moving average, that lines up exactly with the 20 moving average. And guess what? Guess what, my friends? That is where the consolidation took place, in that range. FNGR. Okay, so I'm looking at this from a realistic point of view and from being green point of view. Now, I know if you're riding a hopium train that it's going to hit, you know, the $8, $10, $12 range. I invite the bulls to come in and drive the price up. I invite them to come in and drive the price up if they have dry powder. Why? I don't think that's going to happen. Look at this gap that's got to come back down and fill before it can move on. And even if it does market driven up. Look at the high up here at about 970. It would take a boatload of dry powder to drive this to the $12 range. Callis was just cannabis. Oh yeah, that's right. Okay, I remember now. Okay. And then SNDL went along for the ride as well as a simply play, and that was in regard to ACB. Okay. All right, so that's FNGR. I want to look at the 4-hour chart really quick here before I lose track, because I've been up since 3 a.m. this morning. Let me take a look at the day, a smaller time frame here. Let's look at the 1 hour really quick for FNGR. Okay, what story can you tell me here, FNGR? Oh yeah, so yeah, most likely on the 1 hour chart, the whoa, that's a long arrow. Wave 4 to 5 completed on the 1 hour chart here, and price is observing the 20, and so my thinking is it's going to have to come back down and test the $7 range. And if the bulls step in and say, hey, this is a great buying opportunity for us, they can drive the price up right into this range that I drew out here on the day chart. Remember, everything works within a range when it comes to the stock market. If they can't push, if the bulls don't step in and break above this blue line, which is the 50 moving average, then guess what? We're coming back down to test price target 1, which nailed it here earlier on September 12th, right? So the bulls are going to try to get this up to 830 or 860 in my opinion, or the bears are going to try to push this down to 643. Right now, I don't know what the sentiment is, but that being said, it is a bullish stock being driven by the bulls right now. Okay, so I won't be able to know until I see price action drop closer to the 50-day moving average, like down here. Okay, so that's just a quick look at FNGR and GTII. Congratulations to the traders that's been stuck in GTII. Again, I ask you, are you green or are you greedy this week? This is a recovery week. Why is this a recovery week? Because stock prices are moving to complete the cycle. This is the beginning of wave 2 to 3 for GTII on the 1 hour chart that started on the 8th. Look at this. I will bet you dollars to oranges that the high of GTII is going to be about 97 cents at the top of wave 3, 2 to 3. That's why price accelerated upwards the way it did. So if you look here, I had this arrow drew out, right? I mean, I don't delete any of my TA. So if you look at this arrow, went up, down, and I estimate that it was going to bounce up to at least right here for GTII, which is right where the 8 EMA is sitting at right now, which is around 93 cents. And look, price in the last hour broke below that. Where do you think price is going to go next? Possibly a 382 retracement. Why do I think that? Because if you extrapolate the 50 moving average, as price consolidate downward, it's going to pull the 50 up to match it. So it's going to end up somewhere around here. Okay, so my thinking is you have an opportunity to decide what you want to do when leg 3 to 4 retraces. Can't tell you to buy or sell. I cannot tell you that simply because I am not a financial advisor, nor am I here to give you financial advice. I am here to read the chart and tell you what my interpretations of the charts are. All right, so that's GTII. My thinking is that's what's going to happen. All All right, so if there's nothing else, let's jump over to NVOS. And NVOS is having a green day. So what's happening to NVOS? See, same thing. I'm going to bypass the larger time frame and just jump directly into NVOS 1 hour chart. Okay, guys, it's the same chart, possibly even a head and shoulder formation here on the hour chart, which is exactly kind of what I've already drawn out for you. Okay, so we're looking at probably either here or here, depending on whether it's going to be a 618 retracement. If it's going to be a 1618 retracement, that's going to push this down to right where I think the neckline is going to be, right at about 17 cents. And then it's going to bounce up for the shoulder, right here, up here. So left shoulder, let's see here. Yeah, so left shoulder is right here. Left shoulder. You got to start training yourself to see these patterns ahead of time before they happen. And why do I think this is going to be a head and shoulder formation? Simply because this is wave 5 already. It's going to have to retrace at some point. And again, we'll come back and you know, spot check me as we move forward. And this is why I love doing this, because you guys are my receipt for what I do and my call outs. I need to be accountable for my call outs, and we need to keep track of that. Right shoulder. Okay, so NVOS, that's what my thinking is. Okay, so I'm going to delete this line now, and then this is the new pattern that I see shaping out. And then what happens after a head and shoulders form? We're looking at a very ugly drop down, and most likely it's it's obviously not going to go into zero. The bears would love for it to go into zero because they don't have to cover their shorts. So yeah, so that is NVOS. Again, if there are catalysts that kick in, I could be wrong, but this is the same pattern, very similar pattern as what we've seen. So one more red candle would make this a 3-bar breakdown. So first bar was at 2 p.m. Eastern, 3 p.m. Eastern is the next red bar, and then it's continued to get driven down. And guess where the price is heading towards? The 200, most likely. And then the bears will probably give it a breather for a couple hours, and then guess what? They will continue to drive this down into the 50 moving average on the 1 hour chart. So let's overlay this into the 4 hour chart and see what happens. Okay, 4 hour chart. So I hope you're starting to see the way I think NITA stop. So yeah, so if you look at the bigger picture here, look at where price is starting to head towards. I should really change this color to something else. Let's change it to red. Okay, so if you look here, it's heading towards the 20 moving average right here, and then it's heading towards the 50, and then from here, that's very close to the 618 retracement, which is at 27 cents. There's no escaping the way the stock price retraces on this 4 hour chart. You've got wave 0 to 1, 1 down to 2 here, 2 to 3, 3 to 4, and then 4 to 5 is going to be above the 53 cents. So you can already start to plan ahead your trades, okay, what you want to see happen. So the whole idea or premise of being able to take advantage of opportunities are from the swing high and swing low. If you are a bull bias, you want to take advantage of opportunities when it's down here. If you're a bear, you want to take opportunities when it's up here. So guess what? The bears are probably sitting there going, yes, the price is getting pushed up. Let's pump the stock, get people to buy in, and then we'll just drop on them. And look what they did. Price was pushed up to 53 cents and they dropped it all the way down to 42 cents. I mean, that's the name of the game. You either become a victim or you come out green and not hurt anyone. You're not pumping or you're not being a victim. That's the name of the game, to stay green. Okay, so that's NBOS. VFS, I want to touch base on VFS because believe it or not, I got a ton of views came in through search and whatnot for VFS. So I didn't realize there was that much of an interest for this stock. Obviously, this line was wrong for now. So I think that on the 4-hour chart, I'm going to expand this out. The timeline is going to be expanded out a little bit more. Does not mean that this is wrong, because my price target for VFS is still $14. Look, they came pretty close, right? So this low was $15.33. And right now, they tried to, I mean, the bulls came in and tried to push this up and consolidate a little bit in this area, but it's unsuccessful. It's getting knocked below the 3 and the 8 right now. And if I look at my indicators, let's go to the 4-hour chart. If I look at my indicators, it's oversold on this indicator. And it's hovering here. So it's giving me a mixed reading of what's happening. But because it's trading in bear territory, I'm thinking that it's definitely going to come back down and touch this area before it can decide what to do next. Just like every other stock we've looked at, the 200 is going to either catch it or break it. Okay, so that's VFS. WTER was one that was requested by our team member. There is a pattern, but that pattern looks, there is a bullish pattern here that was formed. There was that pattern that was formed, and wow, it's a 314 retracement. So it started from up here and all the way back down here to $1.11, and then it just kept driving further down. You poor stock. Okay, so let me take a look here real quick and see what's going on. Let me look at the day chart. It's the first time I'm looking at this stock, so give me just 10 seconds to assess it really quick. Okay, so things went bad right around May, as soon as it broke below the 20, and it kind of just hovered around the 20, and things went really, really bad around July 14th, and it just stayed below the 20, and it's hitting this trend line, this bottom of this falling wedge trend line here. Hang on a second. Okay, here we go. So it looks like it's trading. I think I won't know until I see whether price is going to be able to break above the 8 here. For the last, let me see, for the last 35 trading days, it has not been able to hold the 8 EMA. That is extremely bearish. So right now, it's critical that the next couple of days, as this bottoms out, it could come back down and retest 31 cents again, and then break the 8 at some point, and then swing back around up. But right now, it's not looking good. I don't know who asked me that, but we'll talk some more. I mean, I don't know if you're looking at entering this trade or if you're in it already. But right now, it's extremely bearish. to even consider coming in. Okay, TTG. Hey, GPS, right? Let me jump in there. GPS. Oh, that's Gap. Huh. I am not in winter, but I am considering buying in, so I will wait to see a price break above the EMA. You know what? Unless you're in love with this stock, there are so many other better trades to trade. To trade. I mean, look at the green stuff that we went over today. GPS. Okay. Gap. Ooh, Gap. Ooh, I love it when I see a chart like Gap. Why? Because it's at such, I mean, the drama. Ooh, the suspense. What's gonna happen next? We've got a bearish butterfly chart. Price is hovering right above the 200 SMA. Oh my gosh, is it gonna break down? I mean, is it gonna explode? So as of right now, this is such a critical day for GPS, because tomorrow, how the stock opens tomorrow is going to determine, I believe, the next path for this stock. Let me go. There's a lot to go over here. TTG. There's a lot to go over here. You could call it a bull flag, but I'm not going to call it a bull flag yet. And let me explain why. Okay. What I know about the harmonic pattern is this. So the pattern ended on 8/31. Okay, so what you're seeing here is a natural type 1 reaction down, and look at where it's at. It's got two major support pushing Gap up right now before it breaks down. Okay, so the 200-day moving average is 1085. The 20 moving average is at 1075. So it's got a double support right now. Okay, so my thinking is price will, so the natural spring reaction will terminate here for this type 1 reaction coming down after the pattern closes. That makes sense because within 6 to 8 bars, you should see something to validate this bearish pattern, and that's about 17% drop. Think of it as a bullish pattern. Price will go up 18% and come back down. Bearish is the same. So as soon as it hits the bearish completion pattern, you'll see a natural reaction for the bears to take immediate profit of 18 to 20%. And then from that point on, this pattern, in order for it to continue, it should reverse up to a 618, which I'm thinking about $11.88 or higher. And then guess what? Unfortunately, that is going to be the reversal for Gap. Okay, so that's going to end leg 2 to 3, and then 3 to 4 is here. So there are two things that can happen. It needs to break above 1188 and then come back down and then retest 1188 and then break and keep going forward to leg 5. Or we could look at a retracement down to $10.02 as a retracement for this pattern. So there's a lot going on with Gap right now. So my thinking is, you want to watch right now. The opportunity is to play this swing upwards from leg 4 to 5. Okay, so if I was trading this, I would measure out and say, all right, if 1092 is the bottom, a 618 retracement would get me about a 16% profit if I were to come in right now. But you know, I don't I wouldn't trade this right now because I don't know what's going to happen tomorrow. Are the bears going to come in and push this below the 200 moving average? So I would definitely sit and wait, because anytime I see price break below the 8 EMA, which it did today, it's going to close below the 8 EMA. My concern is price is going to continue to fall. And this 18% reaction may turn into a type 1 trade, which is this 14.8% drop from 1175 to 10 before it does anything. So I could extend this out, and then hang on a second, sorry, I have too many lines here. Yeah, so extend this out, hit price target 1 at 1002 before it does a retracement back up. Okay, this is what my thinking is. It's only halfway through this whole entire retracement. So I would personally hang tight on GPS. There's no point in getting in and getting drawn down further. So how do I know that? Okay, so next thing I need to do is I'm going to look at my oscillators here. My two oscillators, my best friends. This is like my left and right shoulder, angel, the devil, angel, devil, if you will. So the oscillator tells me that I don't have a complete oversold situation yet. This needs to close this entire pattern, come in here, oversold, and then bounce back out. Okay, that's where this drawdown, I mean, if you look at this indicator, how it maps out to the price movement, do you see how the oscillator tells me that it needs to come down into oversold? That means that there are still shares for the bears to use to drive the price down. That's what oversold is. I mean, unless the bulls step in to drive the price up, I don't think that's going to happen, because no one's going to get into the line of fire when the bears have their sight on driving this price, the stock down, right? So that's indicator number 1. Same thing with indicator number 2. It's only, I mean, there's still time and room for them to come down and drag the price back down before you see any sort of retracement back up. Okay, so that's what I'm seeing with GPS. Thank you so much. Hello, Joe. Sorry I didn't look over here. GPS, I wouldn't put too much stock into this bear or bull flag. You gotta look at everything as a whole, because case in point, if you want to say, hey, is that a bull flag? No, because look what happened here. This could be seen as a bull flag, but look what happened. They dropped the price down to touch the 50-day moving average right here, 50-day moving average. So what do you think is going to happen next? I wouldn't consider this as a bull flag. I mean, you just saw how they murdered this side, this bull flag. So think of these, you got to look at the pattern as a whole along with everything else. Okay, you got to look at the moving averages. I mean, look at all the times that price would go up, come back down, touch the 50, goes up, comes back down, touch the 50. So this is wave 1, 2, and then this is wave 3. And guess what? Wave 3, it's going to come back down. My assumption is it's going to come back down and touch the 50 again. So if you're sitting there with dry powder, why would you take the risk knowing that patterns repeatedly occur within the stock market? Why would you want to risk losing another, let's see, 50 cents a share or 30 cents a share right here when you don't know it could potentially go to $10? Right? Okay, so anything else? I've just some personal news. I just got home from the Apple event. and I'm flying out tomorrow to Japan, and then I've got a program in Singapore. I'm not going to be around much. Please like and subscribe. If you subscribe, you'll get notification when I do post. I'm planning on staying in touch with everyone through short videos so that I can quickly jump in and out within a minute, give you a quick snapshot of what's happening versus going through this whole live and recording and things like that. Data International is just a beast. Okay, so please bear with me over the next couple of weeks so that I'll do my best to help you guys out. Okay, so one more, EBET. EBET was a previous runner, right? Okay, so EBET. Okay, so we've TA'd EBET before, and it looks like I was dead wrong here on EBET. I was wrong. I was expecting it to come up here, whatever day that was that we looked at this. So maybe it now would be the time. I'm going to move this arrow over. I mean, I did have the arrow coming down, so I knew it was going to continue to drop. But again, look at how many times EBET tried to break above the 8 EMA and failed. This was a big day. This one had 101 million shares traded, and it still got slapped down because people want to stay green, and I don't blame them for getting out. And this could be pumpers pumping the stock up and selling it under you. But now that you've noticed, it's starting to kind of bottom out here a little bit. So I would expect maybe this could be the bottom. Just watch for the price to close above the 8. Okay, guys, that's all you're going to do. Watch for the price to close above the 8. Look what happened here. As soon as price broke below the 8 on August 22nd, things just went downhill from there. Just went downhill from here. Just think of two boxers, right? The guy that is leaning against the rope is getting pounded. Every time he bounced back, the guy that's beating him just pounding him to death. And every time he bounces back and forth from the rope, he can't get out. Think of the 8 as being the rope in a boxing whatever stage. Okay, if you cannot get off the rope to get out to fight back, you're going to get punched. So every time price tries to break above the 8, which is this green line here, and get slapped down, it's going to continue to decline. It's the same the other way around. If price is above the 8, that means that it's very bullish for the bulls. This is the bears. Bears under 8, bulls are above the 8. Same thing here, guys. Just look at this. As soon as price broke below, oh my God, got beat. Yeah, so like right here, as soon as price broke below the 8 on April 17th, it just literally got clobbered and stayed below, right? So you're just getting punch and punch and punch and punch, and you can't get up for a breather. So maybe now is a time where the bears are saying, all right, we just kicked your ass, we're tired, we got to give our fists a break. There's no point in beating you anymore. So now guess what? They're going to let you get off the rope. And then guess what? With all this momentum coming down, they're going to let you off the rope for about 20, 30, 40%, up to maybe the 50-day moving average at 6 cents. You know, like, yeah, it's time to beat your butt down again. And guess what? They're going to drive you down again because the momentum is on their side. Just like gravity. Things fall faster than if you were to throw something up. I mean, if you ever have hopium that the stock is going to MOASS and go up forever, just take a ball and throw it up. Try doing that 10 times and see how many times you can get it to go MOASS. Every time the ball will fall down. to the ground. So I want to close this by asking you, are you want to stay green or you want to be greedy? And think of my analogy of throwing the ball up into the air. Gravity will win. At the end of the day, shorts will win, because when they short a stock, they get money, and that money gets invested in something else. That money was supposed to be kept so that they can buy the shares back to return to the lender. But the short thesis is they will never ever want to buy to cover. And that's, obviously the big hedge funds, but retail traders can't do that, obviously. So just keep that in mind, guys. All right. Have a good day. Market is closed. I'm going to document a bunch of my travels. I know I keep saying this on my iPhone account on YouTube. So hopefully I'll be able to share with you what I do when I'm on the road. Okay. This is Tipline. My name is Vincent Nguyen. Thank you for watching. If you find this information valuable, please like and subscribe, and I'll see you soon.